Is Canada's economy on life support? We'll dive into that and more today on this episode of Building Wealth on the Go. Welcome back, everyone. I'm your host, Brad Wilson, Associate Portfolio Manager at Q Wealth Partners and Wealth Advisor at KLT Wealth Management. Today is February 5th, 2026, and we're diving into our February podcast. If you're new here or just haven't checked out our podcast in a while, we made a little change last year. There's 3 to 6 minute podcast updates, diving into market updates, economic updates, and deep diving into financial literacy to help you maybe learn something or increase your knowledge on certain aspects in the financial world. So if you are new, hit that subscribe button or on whatever platform you're on, leave a like or a rating if you enjoyed. And without further ado, let's dive in. So, is Canada's economy on life support? Well, that is what David Rosenberg, chief economist of Rosenberg Research, recently said in an article in an interview. He believes so. And so today we're going to dive into a little bit about what he said, a little bit about the numbers and the consensus out there forecasting of where we are heading with regards to the Canadian economic conditions. So David Rosenberg, he did come out and say that he is concerned with the very weak growth and structural weakness and believes Canada is on a recession watch. His biggest concern is he sees what is perceived as aggressive rate cuts of 275 basis points that the Bank of Canada did pretty quickly. Relative to a lot of other countries, we cut pretty quickly rates. And despite that, a lot of our factors, per capita GDP is falling. GDP is below potential, and that we're like the growth is really struggling to keep up and accelerate. And generally, with rate cuts, you're expecting to stimulate the economy, help drive growth a bit more within the country. Now, inflation is tame, headline inflation's tame, but the growth profile is what's worrying him. So let's dive a little bit further into some of the big pillars and things that we look for within the economy. So growth and output. Let's talk about that first. We look at Canada's economy as a whole, growing modestly. GDP is flat or weak for late 2025. There is concern, we haven't gotten all the data yet, that there is a contraction in the fourth quarter, which is a signal towards recession. Multiple quarters of contraction, meaning negative growth, is generally a sign that we are recession bound, or we're in a recession. That despite though, we see forecasts suggesting that 2026 real GDP growth in Canada is expected to be between 1 to 1.6%. That's consensus, which is below long-term averages. So it is a sluggish year, but is not recessionary. So that's one thing to look at. Biggest factors, things we're looking for this year would be trade and external pressures. It is no surprise, and everyone's aware of the ongoing U.S. Tariffs and trade uncertainty. It really just the uncertainty part of it, not knowing what's going to change from day to day, the constant, you could say it flip-flopping or moving back and forth between policies and tariffs can cause a lot of heightened tensions in a lot of our sectors. We are seeing Canada diversify its trade, recent deal with China. There's a lot of different negotiations and trade going on. Some of our export sectors, manufacturing goods, has struggled with those tariffs. But we did see manufacturing rebound with its first expansion in a year for January 2026. So that is positive for stabilizing some of our manufacturing sector. But weak demand with exports is a concern, and some cost pressure as well. So the next is inflation and monetary policy. So like I mentioned earlier, talking about David Rosenberg, inflation is in the target range for Bank of Canada, around that 2%, with our current Bank of Canada policy rate at 2.25%. Again, some people feel like there is a need to cut to help that. But the consensus being is the economy isn't in a situation where future rate cuts are needed as of now. And so it's really uncertain, and we're unsure where that's going to head. But the likelihood, most common sort of thesis, is it's going to be relatively stable throughout this year. Labor market and jobs is another one we want to look at. The job market has shown some stability of late, which is good, despite a lot of layoffs and plant shutdowns, auto sector being turned over, manufacturing, like I mentioned. So we will continue to monitor that. But overall, unemployment is edging slightly lower So gains have they've kind of just been washing themselves out. So there is a little bit of stability. We're not seeing significant layoffs relative to hires and whatnot there. So that is important. The Canadian dollar relative to the US is another one to look at. That does impact the labor market and the job market. We will see some fluctuation. There is potential for the US dollar to push down this year, despite recent up movements in it in the last few weeks with the Fed chair announcement in the US. But that could have some impact on our labor market as well and our export market. And lastly, looking at sort of our fiscal picture, Canada reported budget deficit that is widened the first 8 months of 25-26 fiscal year. So this is a reflection of sort of some higher program expenses and more steadier revenue growth. So there is a widened deficit. Again, that is something to consider as we look at the Canadian economy. And one thing to note, social cost pressures. One of the big things, cost of living, is something we always talk about here in Canada. And there's been a lot of articles, a lot of headline news about Canada having the highest rates of food inflation in the G7. Groceries and food prices continue to rise. So there is pressure to sort of deal with that internally here within Canada. So it'll be interesting to see how that sort of plays out. So to summarize, many forecasters expect modest growth in Canada here in 2026. There are a number, like I mentioned, David Rosenberg being one of them, that are warning that we are on recession watch. So it will be about monitoring and seeing what sort of stimulus and negotiation policy that can be put into place to help kind of our economy get through a tough time, trade periods, big negotiation coming up, and not necessarily negotiation, more so of a review of the Canada-US-Mexico trade agreement as well. So there's a lot on the go this year that we'll continue to monitor, and we'll review these updates every quarter for you so that you're informed on the Canadian economy. Thanks as always for watching and tuning in. Hope everyone enjoyed this month's podcast. We'll be back next month with a deep dive into a financial literacy topic to hopefully provide some more education. As always, make sure to leave a like, rate the podcast if you enjoyed, and subscribe on whatever platform you're on. We'll see you next month.